Hey traders, welcome back to the weekly Forex Forecast. Last week we had US CPI released and we saw an initial sell-off in the dollar because it came out slightly softer than expected. But we then had a big reversal in the dollar. Why? Because yes, it came out slightly softer than expected, but it showed that inflation headline has bounced now in the US. And on top of that, coming into the month of August, it's projected to continue to accelerate. And if that's the case, this is bullish for the dollar. And it's why coming into this week, the dollar is one of the best plays to the upside on my watch list this week. Okay, so quick look at the economic calendar because coming into next week, there's not too much we need to pay attention to now, but there is one piece of data. It is the RBNZ on Wednesday with an interest rate decision. So I do really like New Zealand pairs, especially to the short side. But what we're going to be doing is I'm going to be looking at this from Wednesday onwards because between Monday and Wednesday, New Zealand pairs will likely do nothing. So just pay attention to this. If you're involved in New Zealand pairs, it is risky getting involved before Wednesday. Aside from that, we have a pretty clear run at the markets next week in terms of big news events. Okay, so let's have a look at the scorecards for the coming week, and a couple of things stand out here. The Japanese yen weakening once again, and this has been a top short for a while now. And anybody who's been involved in the Japanese yen shorts could be franc yen to the upside, US dollar yen to the upside. Any of those yen short plays have paid off really, really nicely recently. And again, the scorecard data is telling us this week to look for those Japanese yen shorts still. So aside from that, the other thing to note is the Swiss franc has weakened a little bit, although it's still bullish, so I wouldn't sell this, but it's no longer as good a buy as it was, and it may be heading back down this way of the scorecards. You know, just for a pause, just for a break. I do think we could see the Swiss franc higher over the back end of this year. But going into next week, to cut a long story short, I like pound to the upside. I also like the CAD pairs to the upside based on what we're seeing here with crude oil, and also the US dollar to the upside. Those are the three markets I like the best heading into next week. You can also look at Swiss franc longs, but just as a general rule, if something peaks in the scorecards, I tend to look elsewhere. So we're going to be looking at primarily pound New Zealand, New Zealand CAD, New Zealand dollar to the downside. That will be from Wednesday onwards. I'll be most interested in those after the interest rate decision. And then Japanese yen shorts vis-a-vis the pound, the CAD, and also the US dollar next week. And I'm also interested, and we'll look at Aussie dollar shorts against the dollar, the CAD, and the pound. But I do prefer these two to the short side next week. The Aussie is actually projected to hold up a little bit better. Okay, so let's have a look at the individual currencies before moving on to the markets themselves for this week, starting with the dollar. And I've highlighted in previous videos, again, we're on the monthly here, just to take a little bit of a bigger picture view before we dive into the markets here on the 4-hour charts. But you can see the dollar has had a really strong close from the breakout, the 2015 high. And I am looking for this to come up at least to retest the high of the year at the 105.88. And I also think if we enter into a recession environment, we could very easily be seeing the highs and maybe even a bit higher this year. But that is quite a big move, and it would take something very similar to this, you know, pretty extreme rate hiking cycle over here, for example. So we probably need that kind of recessionary catalyst to push this back into the highs. However, going into next week, and I do think over the month of August, especially as we're seeing inflation potentially re-accelerating over this month in the US, that fits very nicely with the technicals of what we're seeing here and, you know, generally an up month in the DXY. Next is the euro. Now, really, we're just looking at the inverse of the dollar, but it's nice to see it both ways. I mean, look at the struggling momentum to the upside and look at this close in the euro. So just like the dollar seems to be setting up for a nice up month in August, which we're currently in, I do also think we are, over the next, maybe even next week, going to see a sharper decline in the euro back down to the 1.06710. So keep this on your radar. Next is the pound. In the monthly, you can see this is just a big bear flag, and I do think this resolves itself to the downside. And I do also think we come and test the lows. I've been saying this to you really all year, even though we've been in this corrective phase, and even though in the weekly Forex Forecast videos, we've been trading pound to the upside quite a lot. And again, this week we are. I do think over the end of this year and into next year, we do come back and test the lows in this market. Next is the Swiss franc, of course, achieved the big target of the 1.117 from January the 1st, which I highlighted. And now we're kind of pulling back. So again, you can see this is still a strong market. And if you really wanted to look at Aussie franc, New Zealand franc to the downside, which we highlighted last week, and in last week's video, I said they were good shorts and they did work nicely to the downside last week. So you could look at the Swiss franc long plays against some of those weaker currencies again, but going into this week, maybe this needs to correct a little bit more first. Next is the yen. I've been highlighting the prior low down here that we are likely going to come and test this. And I do think, especially as the regime that we currently have is still stagflation. Yes, I think there's going to be a recession, but we're not in it yet. We're certainly not trading it yet. You know, a recession trade is Japanese yen strength. We are trading Japanese yen weakness, especially down into the prior low. And that is part of a stagflationary regime that we're seeing across the data set. So going into next week, I do think this move down into the lows here, this is pretty high probability over the next month or so. So keep focused on those Japanese yen shorts. Next is the CAD. Now, if we do get some kind of risk off coming into markets as, you know, indices correct, and we look to Apple correcting and why that is a sign of coming risk off, I do think the Canadian dollar to the long side could suffer a bit as we start to see crude oil rolling over. As it currently stands, again, we're seeing stagflation with crude oil rallying. But on a relative basis, I will be looking at CAD yen and also New Zealand CAD next week. Aussie dollar, I've been highlighting not just this low, but I do think the market's coming down to this low over the back end of this year. And now we're starting to break out of this consolidation, which we've been looking at over the course of this year in these videos. I do think Aussie shorts are going to be some of the best shorts, not just this month, but over the next few months. And finally, the New Zealand dollar, which I've been highlighting, has been corrective and been looking for this to break out. And again, look at the week close on the monthly, followed by this sell-off. Yes, the New Zealand is moving first, but I expect the same in the other currencies, especially versus the dollar. The dollar is the one that I do think will be doing this to the upside. And all of these other markets are likely going to continue to sell off over the course of August. And when that happens, yes, we can trade dollar pairs primarily, but you know, we'll also get some good relative plays like the New Zealand here versus the pound. So I do like pound New Zealand. We've got the interest rate decision, so I'll be looking at these from Wednesday onwards, but I am only interested in shorts in the New Zealand, regardless of what happens on the interest rate decision. If it's bullish for the New Zealand dollar or it's very hawkish, I just won't trade the New Zealand dollar. I can either be short the New Zealand dollar or do nothing next week. You know, buying the New Zealand dollar is not an option for me. Okay, so starting with crude oil. Crude oil has been moving to the upside, and this has been a market highlighted in previous videos to the upside as a buy opportunity. And we have been trending nicely. Every pullback has been a new rally. So going into next week, I can either be long crude oil or do nothing. Selling this market is not an option for me currently. Going to be looking, as always, for a correction and a potential breakout intra-week into the 86.50. But if we pull all the way back and we fail to break out, if this trend holds, and you have a trend line on here and this just pulls all the way back into the 79.50, this is the second area. So this is the first area on a breakout. This is the second area I'd be looking for a potential short-term bounce and trade to the upside in crude oil. Next is pound New Zealand, highlighted to the upside last week, and we traded right into the max profit taking zone here, and that was the move from the week. You can see how we broke out of here, and we pulled back, consolidated, and then we rallied into the max profit taking zone. So really nice market from last week's video. Going into this week, what I'll be looking for is a correction into Wednesday, and then I'll be looking for one of two things. Either we break out on the interest rate decision, and I'll be looking for a pullback and a follow through into the 2.1450 area roughly. Or if we just consolidate and we sell off into the 2.0950, but here's the key, we sell off on a kind of nothing interest rate decision or something which is not very, very hawkish, right? If you get a very, very hawkish catalyst, again, I don't think the Reserve Bank of New Zealand are going to raise interest rates, but say they came out and hiked rates a couple of basis points, obviously this is not something you're going to go in and short the New Zealand dollar from, right? Because it's a very strong bullish catalyst. But if the interest rate decision comes out as expected and not too much changes or is unexpected in the rate statement, and you get a sell-off in the New Zealand, then that's a good opportunity to come in and start to fade this to the upside. That's the second play I'll be looking for post Wednesday's interest rate decision. Word of caution, if you are fading interest rate decisions, make sure you understand what you're doing, because you don't want to be on the wrong side of an interest rate decision if you've got a very hawkish catalyst. Next is pound yen, also highlighted in last week's video, and look at this move up. We broke out and we rallied right into the max profit taking zone, and that was where we finished the week. And these are the areas where if you trade into here, you should consider booking your profits, because the chances of it going much further are quite low. So coming into this week, I'm going to be looking for this market to consolidate. Any consolidation is viewed as an opportunity to look for a breakout into the 186.50. And of course, if we just trend all the way down this week and we test the 181.50 area, this is the second place I'd be looking for a potential bounce and trade in pound yen to the upside. Next is pound Aussie. Like these two markets here, I can either be long pound Aussie next week or do nothing. Selling pound Aussie is not an option for me. And you can see we're kind of stair-stepping. We're breaking higher, pulling back, breaking higher, pulling back. So I am looking for a consolidation in this market and a breakout. We've arguably, to be honest with you, already started to break out of here. So any pullback is viewed as the opportunity to look for a long opportunity into the 1.980. And if we just pull back and this just becomes a big A, B, and a C and we correct all the way into this area, this is the second place next week. I'll be looking for a potential buy opportunity in pound Aussie to the upside. Next is New Zealand CAD. Now look at New Zealand CAD, really nice breakout of what's known as a descending triangle. We've got these kind of lower highs and at the same time we're testing the low, and then we break with momentum. So going into next week, I really like this market to the downside. I would like to see a pullback, especially into the interest rate decision itself. Any consolidation and then a breakout on the interest rate decision is viewed as an opportunity to look for a follow through into the 0.7950. And if we just pull all the way back and perhaps we spike higher on the New Zealand interest rate decision, but again, we don't really see any particularly hawkish catalyst. We do not really see a reason for the New Zealand dollar to rally off of the back of what may be just an otherwise pretty expected or consensus interest rate decision, then this would be the area, the 0.8140, where I'd be looking for a potential sell opportunity to fade this to the downside. Next is CAD yen, a nice stagflation setup because we do have crude oil outperforming and it is highlighted in the scorecards and has been as a good long opportunity. Still looking to be bullish, and at the same time we're seeing the Japanese yen still selling off to the downside. So going into next week, any consolidation in this market does set up a nice opportunity to look for a breakout to the upside up to the 109.50, and you can see we've been testing the highs. So if this breaks, we could see a nice move. But if we just continue down and this trend line holds and we just sell off all the way into the 106, this is the second area next week I'd be interested in a potential bounce to the upside and a long opportunity in CAD yen. And finally here we have the dollar pairs. Now you can see euro-dollar has been consolidating and I do like euro-dollar to the downside next week. They're both fairly evenly matched, but we just discussed two things. One, the fundamentals of a reacceleration in inflation in the US, which is fundamentally bullish for the dollar, bearish for the euro. And the technicals are also in line with a sell-off in euro-dollar this month and also a potential rally in the dollar itself and a sell-off in the euro. So those things combined, even though in the scorecards heading into next week, this market is neutral. In other words, it's projected to range. And in fact, this is what's been happening. It does mean that I don't favor this. I do like New Zealand dollar, US dollar, yen, and Aussie dollar next week. Those are my go-to markets, but we cover euro dollar every week. So on balance, if you are trading this, I'd be looking for one of two things. Either for a correction and a breakout down to the 1.0840 or a pullback into perhaps this previous high over here at the 1.1060. This would be the second area I'd look for a potential short-term short in this market, but given the opportunity, I will trade these $3 pairs and perhaps even these markets before I trade euro-dollar, based on the neutrality score in the scorecards this week. Next is New Zealand dollar, highlighted in last week's video as a good short opportunity, and we came right into the profit-taking zone here at the 0.600. Coming into this week, I do favor shorts once again. We do have an interest rate decision, so I'm going to be looking for a consolidation into Wednesday and then a breakout on the interest rate decision. Any pullback is viewed as the opportunity for a follow-through trade into the 0.5900. But of course, if we do the same like the other New Zealand pairs and we just spike into the 0.6080, this is the second area where you could potentially fade that interest rate decision for a short-term reversal. So what I'm going to be looking for is any pullback and consolidation into this area is viewed as the opportunity to look for a breakout into the 147. Very similar to over here. Breakout into the max profit taking zone. Then we correct into the, in this case, there was no max profit taking zone, but into the end of the week. And again, if we consolidate and instead of breaking out, we just pull all the way back into the 143, this is the second opportunity to look for a potential long in US dollar, Japanese yen. I can either be long this market or do nothing. Selling this market next week is not an option. And finally, we have Aussie dollar before moving on to gold, silver, and Bitcoin. You can see Aussie dollar is struggling at the lows, but we are actually breaking out of consolidation here. And this initial breakout, this is something you want to pay attention to because we don't have an interest rate decision or anything like that. So coming into next week, this could be a very nice market. Any pullback is viewed as the opportunity to look for a breakout into the 0.640. And again, if we pull all the way back and maybe retest this range high over here, the 0.660 is where I would be interested in a near-term short and to fade that move to the downside in Aussie dollar next week. Okay, so wrapping up the video with gold, silver, and Bitcoin. Gold and silver were both shorts in last week's video, and they did perform nicely to the downside. Silver even reached its max profit taking zone. However, going into this week, you can see we're still down near the lows. So any pullback in gold is viewed as the opportunity to look for a bearish breakout into the 1880. And if we pull all the way back and we hold this trend into the 1945, this is the second area. Back at these highs would be a great opportunity to look for a short to fade this rally to the downside in gold. Next is silver, highlighted to the downside in last week's video, and we traded right into the max profit taking zone, and we couldn't get any further past this. So really nice move last week. Any pullback this week, need to see a pullback in order to get the opportunity for a breakout into the 2190 area. Or of course, if we hold trend and we just pull all the way back into the 2340, this is the second place I'll look for a potential short in silver next week. And last but not least, we have Bitcoin. Now, Bitcoin has been really lacking volatility, and the issue with that is what comes next is probably, whether it's to the upside or the downside, is very hard to say, to be honest with you, but it's probably going to be very volatile. So trade Bitcoin at your own risk. But if we do get a pullback in Bitcoin and you are looking to trade this, I would favor shorts. Why? Because we have that bullish bias in the dollar. And as we start to see stagflation taking over, the Fed are going to have to potentially be more hawkish, maybe even raise again, even though the bond market's not pricing that in right now. And all of that is going to weigh on risk assets like the NASDAQ, like the S&P 500, and they're correlated with Bitcoin. You're seeing liquidity being pulled out with QT and everything else. So I do favor shorts in Bitcoin, any breakout to the downside into the 2750 area, or if we come and retest and maybe we do a right shoulder over here, if we retest the 31,000 area, that would be the second place I'd potentially looking to be fade Bitcoin to the downside. But I do think there are better markets than Bitcoin. It hasn't really been one of my favorite markets recently, even though we cover this every single week. So that is it for me for this week, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the room each day where I go through these markets and the setups that I'm personally looking at with members on a daily basis for over 75 markets in different asset classes, including stocks, bonds, Forex, and commodities.